Carlyle is a firm, we're a global firm. We have about $150 billion under management, and we have just recently initiated an effort in Africa. We've opened offices in Joburg, which I've learned to use as the term, and Lagos. We have a full staff, and we're hoping to have about $750 million for the first fund. I'd mentioned that we see, thus far when we're in the market, we see tremendous interest in Africa. I mean, people understand the growth potential, the demographics, the better political environment, but it's a market for investors that you have to educate them. It's not going to be fast. You're not going to see a rush of institutional money. But we're very confident of the long-term prospects and our ability to build a rather large enterprise there. I have to say that private equity, I don't think, is the answer to the mega investments or the infrastructure problem. In some ways, we're the man in the middle. We can't do huge deals, and we don't want to do small deals. We'll be looking for something on the order of $25 to $40 million of equity, which, when you put that against what the large infrastructure projects are, that's a relatively small number. And the reason, we just don't have the capital or the skills to do these massive projects. A lot of them have a much longer time horizon than suits us. We typically like to be in a deal and then exit within 3 to 5 years. And where we're likely to be active is in what I would call the second iteration of infrastructure. To do a lot of these projects, you're going to need financial systems, you're going to need services, logistics, suppliers. I think that's where we can be a provider of capital and a facilitator of growth. Our idea initially, I think like most of the private equity firms, is to start in Johannesburg and then jump into sub-Saharan Africa. And we're going to look first, of course, at the larger markets, Nigeria, Kenya, and Ghana. And we're quite conscious of some of the problems, but I mean, that's part and parcel of investing in what are today called frontier markets. So we're quite optimistic, but I think we're going to be structured below. We can help in the infrastructure problems, but we can't solve that or do those mega projects.
Yeah, Ed, thank you. A question that I had for you, obviously you've kind of identified why you want to be in sub-Saharan Africa, but when you look at how you invest across the world, how are you going to change, what's your risk tolerances and all for Africa versus, let's say, private equity deals you do in Europe or India or somewhere else?
In the more mature markets, we have found that you can do total buyouts. I mean, we can end up owning and controlling the markets. We typically don't need local partners. When you get into the markets such as Africa or some of the things we've done in Asia, they're less oriented towards control. A lot of them are family companies that are selling a piece, and you have to have good local partners to know the area. The only way we adjust our risk profile is in the required rate of return. So if we were to require 20% plus in the US, we'd probably be in the 25, 30 plus in countries like Africa.
It has been said that investing in Africa, if you're obviously with the right people, is one of the most profitable places to invest.
Interesting. One of the feedbacks that we've gotten from very sophisticated investors is that our time horizon is too short. I mean, we're thinking 3 to 5 years. A lot of sophisticated investors are thinking 5 to 10 years to really see the full benefits of investing there.
Yep.
Let me say that deal origination is a problem everywhere. I mean, that is our lifeblood. I think what you say is true. I mean, we're in a very early learning phase. And, as we see it, a lot of the legal and the regulatory issues are not resolved, and we're going to have to reach out and kind of work with people on that. We know from experience in other emerging economies that there's certain areas that are going to really do well, and I kind of put it down to, first you look at demographics. Typically you get a rise in the middle class, and then, to borrow a phrase from the US, you follow the money. If a lot of money is going into power generation, if a lot of money is going into utilities, there will be a spillover effect for companies in which we'd like to invest. But the point you raise is an uncertain regulatory kind of legal environment is a really critical issue. The better the investment environment, the more money that will flow. And people are very, as they look at Africa, that's a real concern.
Doing business in Africa, you can't afford to be without Africa Investor.